Well, welcome, ladies and gentlemen, to the first Trader's Edge installment of 2020. Our topic today will be options on Bitcoin futures. Well, let's talk first about the futures contracts that have been trading now for about 2 years. Let's just summarize what's happened and the progress we've made. We have over 3,400 accounts trading Bitcoin futures, which is remarkable in 2 years. The year-to-date average daily volume increase is about 96%. The open interest increase is about 93%. Year-to-date, as of December of last year, 2019, ADV was 6,370 contracts, and that's about 31,850 Bitcoin a day. 47% of the volume is traded outside the United States, so we have good participation in European and Asian time zones. About 3.8 billion of monthly notional is traded on average since launch. The record volume day was over 33,000 contracts a day back in May of 2019. It's about 1.3 billion of Bitcoin. We have 5 participating exchanges in the CME CF Bitcoin reference rate. That's the important reference rate that our futures trades off of and tracks. It's a reference rate based off of 5 participating Bitcoin exchanges. So we don't rely on just one exchange or 2. We have 5 of them, so it guarantees a little more integrity in the market. We had a record of 56 large open interest holders, and that means you've held at least 25 contracts, and that was established back in July. So the CME groups were making a major contribution to the evolution of the crypto ecosystem, and we look to continue that in the near future. So there's a chart here that we can see, and in the light blue you can see Bitcoin prices coming down from the 20,000 era back in 2 years ago when we launched in 2017, settling down around 3,500, 4,000, and then rallying back up, and then coming on back down to a more normalized level here at around 7,000. And you can see in the spikes, the white spikes up. Those are volume. That's a great increase in volume that's happened since we launched 2 years ago. It's been this steadily uphill, great progress, bringing new people into the market, and more liquidity helps to generate this. So why talk about options now? What are some of the advantages that we're going to be offering? Well, the underlying futures, its value is based on a regulated, robust CME CF Bitcoin reference rate, which we talked about. It's calculated daily using trade flow from 5 major Bitcoin exchanges and trading platforms. So you get a robust calculation of a reference rate. It settles into an actively traded CME Bitcoin futures contract, so the options will settle into Bitcoin futures, which is good. It will make for strategies that are a little bit easier in implementing and exercise and assignment and things like that. It offers Bitcoin traders margin savings through margin offsets, and we also mitigate counterparty risk of default through our central clearinghouse. The best thing, one of the best things, is no wallets required with futures and options on futures. All you have to have is a futures account through a futures commission merchant. Options expand the choices via multiple strategies for traders and those managing risk. You can do straddles and strangles and ratio spreads and butterfly spreads. Anything you can do that you've done before in futures can be done in Bitcoin options. And they're coming January 13th of 2020. So let's look real quickly at the contract specs. The contract unit's 1 Bitcoin futures, which our futures contract equals 5 Bitcoin. The price quotation is in US dollars per Bitcoin. Minimum price fluctuation is 5 index points, or $25 per tick, as we would call it. Product code is BTC. The listing cycle mirrors the BTC futures, the Bitcoin futures. Of course, anything subject to revision here. The option style, this is important. It's European style, exercised only on the final day of trading. That's the only time you can exercise. There is no early exercise. Termination of trading is the last trading day, is the last Friday of the contract month. So trading of the expiring futures terminates at 4 p.m. London time on the last day of trading. The strike intervals are 50, 100, 500, 1,000, and 10,000. And on the following page, we have a little bit more detail, and you can do a little homework and background reading on how those will be. We also have a block minimum, 5 contracts. We have position limits, 2,000 options contracts. That's delta adjusted with futures, and also subject to further review too. Settlement at expiration, well, options exercise results in a position in the underlying cash settled futures contract. In the money options are automatically exercised into the expiring cash settled futures, which settle to the Bitcoin reference rate, which we talked about. And as we said, those are the strike intervals there. The rules are a little bit more elaborate. You can read those on your own. And when we have large moves, depending on how high or how low Bitcoin goes, that will determine the strike ranges or strike intervals. So how do we look at Bitcoin pricing? I have up here an example from Quick Strike, which you can get on CME Group. It's available on CME Group. We've been using this for some of our teaching and some of our education modules. It's a really wonderful tool, and it's available for free to CME, some CME customers if you go to our website. And it's great because I remember when I started trading options, some of this option software was thousands of dollars. So we have Quick Strike available, and it lets traders price and do software and do calculations, position analysis, fair value, and things like that. The thing about Bitcoin is we don't have any prior options trading data. We don't have any implied volatility data. All we have is historical volatility on the futures. And by using that, we can make some approximations. And then, of course, we can go into the OTC market where we've seen some of the options data. It's really interesting. But we can approximate by calculating theoretical premiums using historical volatility just to get us a seed value, where we might be, to get us into that general area code, so to speak. And we can use Quick Strike. So take a look. We have there, you can see the out-of-the-money puts, the red box, the red rectangle, the out-of-the-money calls. And then with the green arrows, we have the at-the-money straddle, which is the 7,300 call and 7,300 put with 1 week to expiration. And the call is trading at 194. The put's trading at 186. So the cost of the straddle is 380 points. It's 380 times $5, so it's $1,900 per straddle. So it's it's a pretty large premium there. But you look at the volatility on the side there, it's 47.08. The implied volatility of the at-the-money is 47. That's not implied, excuse me. That's a historical volatility number. Now, we've looked at some data. Some of the people here in research and at the Quick Strike looked for us at the OTC options implied volatility. They're substantially higher. Some of the implieds are 20 full percentage points higher in the 60, 70, or even 80 point range. So be careful. Options will price. They'll be a little bit expensive, and that's to be expected given that Bitcoin has had some very, very large moves on its way up to 20,000 and then on its way down to 4,000. And it had a very nice reflex rally back up to 10, 11, 12,000, and it sits comfortably now at around 7,300, 7,400. So we urge you to check out Quick Strike, see where options are trading. And then, of course, next week when they start trading, we'll have real data and we'll be able to calculate implied volatilities. And as time goes on, we'll be able to give you more robust data on implied volatility and the cheapness or expensiveness of Bitcoin options. So just a couple things, key takeaways here, comparing various Bitcoin vehicles. We have the Bitcoin futures, Bitcoin options, we have Bitcoin on the spot market, and the Grayscale Bitcoin Trust. We're not going to talk too much about that, but I want to focus on the futures and the options. Again, no wallet requirement. Whereas if you trade Bitcoin on the spot market, you do need a wallet. Capital efficiencies, you're going to have leverage with futures available to you. And of course, with options, you're going to have that too, as well as margin offsets. So futures and options will give you distinct advantages over trading spot Bitcoin or anything else. We have a regulated market. The CFTC is our primary regulator. The National Futures Association regulates us. We also have surveillance and compliance departments that are self-regulating and watch these markets very, very closely. So whereas there's not as much regulation on Bitcoin market, although that's probably going to change as the market evolves over time. Clearinghouse risk mitigation, futures and options definitely have it. There is not that clearinghouse risk mitigation on the spot market necessarily. Price tracking to the underlying, of course, very good given our Bitcoin reference rate. Very good. It'll be good for the future. It is good for the futures. It should be good for the options. It's not applicable for Bitcoin because the reference rate goes based on spot Bitcoin. By the way, the Bitcoin Trust has very, very high premiums above net asset value sometimes as much as 20, 30, 40%. So those are some of the comparisons. And as we always tell people, especially with options, always do your homework. And if you need additional context, call Giovanni Vicioso. He's a Senior Director, Equity Products. His email and phone number are listed, or you can contact me, myself, David Lerman, the Director of Education. We also have a couple links there, educational course on Bitcoin, as well as our FAQ on the links below. So good trading to you, and Happy New Year to everyone.